Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you for joining me. Well, this week we've got a huge economic data ahead of us, and most probably we will see a lot of choppy, volatile trading as all eyes look to the US Federal Open Market Committee, or the FOMC rate decision, which will be the key driver for the markets. Looking ahead though, with the US Federal Reserve meeting that commences on Wednesday and wraps up on Thursday Sydney time at 4 a.m, it is widely expected that the FOMC, or the Federal Reserve, will lift interest rates for the fifth time, with the forecast widely expecting of an announcement of 75 basis points. With that, the US inflation has not cooled, and as quickly hoped, the central bank will likely outline its hawkish policy. Along with that, investors will be looking for any dovish overturns, while the US Federal Reserve Chairman Jerome Powell takes question and answers in his press conference for 30 minutes later after the announcement. The global markets have suffered much trauma since Tuesday's key US inflation report. After the shake-up came through, then hotter than expected, the market found that the US CPI rose by 8.3 in August, higher than an estimate of 8.1. Still, we're keeping an eye on other data that will be coming through this week, and that is we've got the RBA monetary policy meeting minutes. Along with that, we've got the Bank of England announcement, which is widely expected to see a 50 basis point rate hike to 2.25. Along with that, we've got the Bank of Japan and also the Swiss National Bank announcements, which is expected to see the Swiss National Bank lift its interest rates by 50 basis points, that is from negative 0.25 to positive 0.25, while the BOJ is expected to keep rates on hold. As we look at the technicals, we can see that the Australian dollar took a challenge at that level of 66.80, printed an intraday low of 66.69 and closed above there, so therefore still keeping the bullish outlook intact. That is, further demand likely to may come through. The reason behind that is that we just draw a line here on the price as we get lower lows, and we can look at the RSI. We're getting a rise in high highs, therefore could see further risk that the rebound may continue on, and that is look towards the region of 67.35.45. The Euro outlook, well, was posted in engulfing candle, or bullish outside range day. And along with that, the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains flat at 109.65. In light of the RSI breaking through the midway point, I feel that there is further upside potential for the euro this week, and therefore could look towards the 100.15. We do need to see a close above there, and unfortunately we didn't quite get it. Nevertheless, from the bullish outside range day, and also if we see a break above the point of around 100.40, that would give us further indication to the upside of challenging the 101.30.60 area and reassess from there. The dollar yen still pressing on this trend line, which is seen roughly around 142.75. We didn't get a close under there as the market did close at 142.87 in New York. Nevertheless, we're still in a prime position to see this market tumble further, and if so, the break of the trend at 142.75 should give a measured move or trajectory down towards 141.05.15. Heavy technicals could soon see the MACD marry up with the RSI and support this bearish case to the start of this week. I'm still expecting to see sterling recover a little bit. Nevertheless, the market did post a fresh low of 113.49 on Friday. In light of the pattern, the downside objective is anywhere from 111 to 113, so we did briefly touch the first objective, and the market did close a little bit firmer. But all eyes will be on the Bank of England this week, and the expected rate from the hike could see a rise from 1.75 to 2.50. As we can see, the gold has rebounded on Friday and now taking the challenge back to that break level 1,680. In view of the actual pattern, we still need to see a lot more evidence to support a bullish case, and therefore any advancement beyond 1,678.82 would need to sustain at least for 24 hours, and if so, then that would see a slight squeeze up to 1,694.98 and reassess. And finishing up with oil, the market rejected that top side, which was around 88.40.50, and we've seen 4 rejections from there, and now sets the course for this week for a slightly bearish possibility to see the challenge down towards 82.60, and with an objective around $81 a barrel. Well, that wraps it for the morning. Thank you very much for joining me. As always, keep an eye on the intraday report. I hope you enjoy the great start to the new week.